From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 15th, 2017. Today we're going to be taking a look at the EURUSD, the euro, versus the US dollar for today's trade analysis. First things first, of course, this week we did have some positive news for the US dollar, a raise of interest rates in the US. We also had some other news this week was specifically positive for the US dollar, but we really haven't seen the market really respond to that positive news as you might expect yet. Looking at the trend here on the daily time frame, it's not quite easy to figure out what the trend is it? We can see the blue trend line was a clear uptrend. That's not too hard to see, but that's in the past. Recently, we've seen this green trend line where we see a lower high along the green trend line at the very top of the chart. But the black trend line was specifically bullish along this period of time. So discerning the trend is a little bit difficult right now for the euro dollar. Zoom it in a little bit. Something we've been discussing in the trade room, the live trade room every day, is these black boxes and the specific resistance we've seen at the green zone, 117.95, 118.20, supported the blue zone, bottom of the boxes, 117.30, 16.95. What we've seen there is consistent market behavior going back in time at the green and the blue zone. In the boxes, resistance and support. There's been a few times where the market has rallied to the purple shaded area. Look at these black boxes. You see a rally to the purple zone and then a fall. Even here you see a rally to the purple zone and then a fall. Another rally, then a fall. A rally even here, you can see spiking into the purple zone and then falling. Finally getting above, making a new high, coming back down, and now in the recent time frame, even on this week's news, we saw a spike to the purple shaded area, 118.60, and now we're right back down underneath that green zone. So it's very interesting key level of resistance here, 117.95, 118.20, that the market has been responding to for many months, going all the way back into July of this year. I think it's very interesting how it keeps spiking to the purple zone and getting back inside and underneath the green shaded area. Let's zoom it in a little bit and you can see that a little bit better. You know, just take a little circle here and let's just put this here and you can see right there where the circle is. Spiking to the purple zone and then back underneath. Spiking to the purple zone and back underneath. Here we are again. Spiking to the purple zone, back underneath. Each time it gets back underneath, where does it go? It goes all the way down to the blue zone. So here we are underneath the green zone again, 17.95. The potential, historically accurate, is that it goes back down to the blue zone. And given our U.S. news that we've seen this week, that doesn't make, that does make a lot of sense, is that we could see it go back down to the blue shaded area. So let's zoom it in one more time. Also, we can see that the current market is underneath the 100 period moving average. That's the green line coming into the chart here. We're sitting underneath that right around the 118.05 level is where that 100 period moving average sits. So for the day today, I would suspect that as long as it stays under this green shaded area, under the moving average, under the 118 level, happens to be some Fibonacci there also. Take Fibonacci from the low of the black trend line to the last high, low to high of the black trend line, and you find the 382 sitting at 118.05 as well. That's where we're sitting underneath. So we have Fibonacci here, we have the green shaded area, we have the 100 period moving average. For the day, as long as it's underneath that, I don't think we want to go long and buy the euro. I think it's more likely we're looking for the short side, looking to target at minimum back to the blue zone. And of course, if ever it breaks that blue zone in the positive movement for the US dollar, we look for the breakdown and the continuation lower. We know what the risk is. The risk is that it breaks above the green zone and goes higher. So stop losses, of course, would go above the green zone. Maybe 40, 45 pips above your entry at 17.95, giving you, an appropriate amount of risk, because if it breaks the green zone, we already know where it's going. History tells us, at minimum, the purple shaded area. So if you want to minimize the impact to your trading account, that's what you're going to do. You're going to wait for it to go back down, but you don't want it to get back above that green zone. 4-hour chart won't really change any of that, just gives us a little bit of a zoomed in view of what's been happening. We got above, spiked all the way to the purple zone, sudden infusion of sell orders, continued on this 4-hour candle, sellers continued, pressuring it back down underneath now the green shaded area. We see this little candle right here sitting inside the green zone, coming back down to 17.95, giving us a little bit higher confidence that sellers are still trying to drive it down from this green shaded area, having a very difficult time staying above the green shaded area. And of course, like I said, we're going to target all the way down to 1730 again for the euro dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.